Good morning. As promised, coming back at you with another small tidbit of basic personal finance info, some basic investment education. I'm going to try to keep these videos short, certainly 5 minutes or less. But today I just wanted to talk about cash, specifically cash as an asset class. As I mentioned yesterday, we are all investors. If you participate in the labor force, you take your paycheck, you put it in the bank. Not only are you investing in the bank, but you're also investing in the asset class of cash, assuming it's going into a checking or savings account. And there are a lot of different asset classes. You have stocks, bonds, commodities, futures, real estate, all different types of asset classes. And history has shown us over the last 100 years that cash is by far the worst of those when it comes to return. There's a gentleman named Ray Dalio. I invite you all to check him out. He's a great resource. He's the biggest and best money manager that's ever lived. He's founded and built the largest hedge fund on earth. He wrote a great book. I'll put a link to it below. I invite you to check it out. But he talks a lot about this. And while cash does have its importance, you need it to pay your bills, you need it to buy food, handle any immediate expenses, which we certainly all have. As a long-term vehicle, it is definitely not a good idea. In fact, even Warren Buffett, who I hope everyone knows, he was once asked, hey, how would I take and invest my money? How would I build a portfolio? The guy that was asking was trying to get him to go into the nitty-gritty of giving him stock picks or something along those lines. And Warren said, invest in the S&P 500 and go back to work. So that is an excellent starting place for people that don't know anything about investing. The S&P 500 is a group of the 500 largest publicly traded companies. It is all the companies you've ever heard of and more. And that index, which you can buy an index fund, which gives you a little piece of each one of those companies, has had an average return of about 8%, 8.2% over the last 50 years. So that would mean, through the magic of compounding interest or compounding returns, in this case, which I'll talk about in a different video, that means that you would be doubling your money every 9 years. Comparing that to a savings account, which a good one may pay you 1%, it's going to take you 72 years to get that same return. And again, history has shown us that a savings account is not necessarily more safe than the S&P. And what else can we look at besides history? So I'll leave you with a quick story about a gentleman named Theodore Johnson. Theodore Johnson was a UPS truck driver. He never made more than $14,000 a year in salary throughout his entire career. $14,000 was at the high end. So he was approached by a friend early in his career, and his friend kind of had the same conversation with him along these same lines and convinced him to put a tax on himself. And so he religiously took a certain percentage of each of his paychecks and did a process called dollar cost averaging, which is something I'll talk about again in a future video. But he did this and he put it into an investment account, into very safe investment vehicles. And he, again, I'll repeat, he never made more than $14,000 a year. Theodore retired with $71 million. Not bad for a truck driver. Hope that at least gets some people thinking. You guys have a great day.